So that's the other thing. If you just build more homes, the prices will come down, rents will come down,
right?
And then the large institutional investors will move on to their next victim, whichever it'll be, you know, shopping malls or hospitals.
This is Las Vegas Real Estate Now with local real estate expert Harvey Blankfeld.
You know, affordability is the buzzword in real estate today.
It is.
You brought in a chart, which I thought was really interesting, showing, and I guess it was produced by somebody who's a rental operator, basically. Is that right?
Yeah, it's from Jay Parsons, who's a big rental housing economist. He's a really great presence on LinkedIn and a Substack, effectively, even though it's on Beehive, but Substack, where he sort of talks about these issues.
Okay.
Some great time analysis. But he had a major national single-family rental company, gave them some data on what are the credit scores of their occupants versus what's the credit score you need to get a house for a first-time home buyer.
Right.
And there's a pretty big delta between the two, about 60 points.
Yeah, I mean, I'm looking at the numbers, and the people who are currently renting, their numbers range anywhere from the low sixes to the high. There's no one over 680. I mean, they're just not there.
Yeah.
Now, and he's showing that the people who are buying are having a score about well over 700. Well, not well, but up and around 720 or so. Which is interesting because that's predominantly that's going to be conventional financing. That's the score required to do like a Fannie or a Freddie loan. But if you do FHA, I think you can get away with like a 650 or 675, something like that. So some of these people might actually qualify, and that's one of the reasons we do the show. We don't want to afraid to do it.
Yeah, with a lower down payment too. So.
Exactly. And as I mentioned to you beforehand, if they can come up with 3 or 5% for the down payment, they can do it. And honestly, these days, sellers are going to help them with their closing costs. So that's all they might need is that. And if you're a veteran, you don't need any down payment.
Yeah.
I mean,
with
you just don't need
VA loans. And
support. VA loans are the best loans. They're the vets, and they deserve to have that kind of a program. It's funny. Some vets feel like it's some kind of a charitable thing. It's not. This is still a regular loan. You got to qualify for it. It's just the federal government is helping you get it. You don't have to bring money to the table to do it. But I thought that was a very interesting chart. And we talk about affordability. We've got so many issues now. When we talk about it locally, you know, interest rates have an impact on it, but our median price, which has been near its record high for, 18 months now, right around 480, 470. It shot up a little bit 1 month, but came right back down. And with that, and then with the interest rates, it just costs twice as much to buy a house as it did just a few years ago.
It does. And the problem is when you have, folks in Washington that are doing things that upset the bond market, it also then makes those rates go up. And
people in Washington.
People in Washington.
I mean, the 10-year bill was, it's
went
gone
nuts.
Up. Yeah. And it was on I think his goal was get it below 4, and it was trending that way, and now it's back up. And
well, hopefully we're recording this on Wednesday. Hopefully after some of the news today, that'll soften a little bit, and hopefully there's not quite a hard line about acquiring a big island. And if that's the case, maybe that'll soften and we'll see interest rates stabilize or come down a bit. Hopefully, I don't know.
We need a lot of real estate there, I guess.
That thing's huge, right?
That's like very large.
That's like double in their size almost. I mean, it's a monster. But nonetheless, that's the kind of real estate we don't really talk about on the show. Yeah. We try to stay away from. We can't help ourselves sometimes. We can't help ourselves because it does affect affordability.
Yeah, it comes right back to us.
It does. And then when we talk about the number of investors, Patrick and I were talking about it a little before. I know you did an article just recently on that, didn't you? Tell us a little bit about your article, Patrick. What did you discover?
Yeah, well, obviously, I believe it was early January. Trump kind of set the residential market on fire. He tweeted or posted or Truth Socialed that he wants to ban large institutional investors from the housing market.
Yeah.
And so that was his first statement. And that obviously set off like a furor. I think I've written 3 articles about it now. Yeah. And then yesterday, he sort of laid out more specifically what he wants to do. He originally said he wants Congress to act on it.
Yeah.
And now what he said is basically he wants Treasury Secretary Scott Bessent to first define a large institutional investor.
Right.
And then they're basically going to ban them from the housing market. I don't know what type of levers they would have to have them potentially offload them, because then we get into a constitutional question of everything that America was founded on is private property.
Yeah, exactly.
But this, I don't know.
If he can just stop them from buying, I think that's almost enough. I mean, I would like to see him unload some of that, but
There's always the problem with this is that it gets back to the bill that recently got defeated in the Nevada legislature about limiting corporate buyers to. They originally said 1,000 homes.
Yeah.
Corporate buyers can't buy anymore. But the problem is that Pretium Partners or Starwood comes in on January 1st, buys 1,000, and then mom and pop investors who have a trust or a small LLC are completely shut out of the housing market.
Yeah.
As somebody who comes from a more socialist country, anytime the government gets involved in something, there's always negative ramifications that they never see coming.
Indeed.
So this Trump's stance on this is very, very left wing, which is kind of odd.
It is.
Part of me would just
interfering with capitalism.
market, yeah.
You know,
yeah,
basically.
you're getting involved in the housing market. I'm not going to say that I'm, as a journalist, I have no opinion, but I'm not going to say whether or not investors are a good thing or a bad thing in the housing market. But if you try to cap them or ban them, there's going to be, Nick could probably explain this better, there's going to be unintended consequences that will hurt the housing market.
I mean, the best one is, for a lot of home developers and home builders, their projects don't pencil in to build everything at once. You have to sort of sell that first batch.
Right.
And large institutional investors or big investors are a big chunk of that sort of first wave of houses.
Sure.
And if you ban them from doing that, then that means home builders are going to build fewer houses.
Which
Ultimately,
is not something we want now.
All of our problem is back to supply. We need more housing of all
Indeed.
types.
All types, yeah. I mean, particularly entry level. I mean,
Yeah.
we need a lot
Definitely.
more entry level housing right now, more than anything else. And if you build more houses, you increase the supply. That'll soften the prices too. That's something we need to do. So you're right. We have to encourage that in some way, shape, or form. I don't know. I mean, for me, I've always thought about the idea that you should take away take away some of the tax advantages to the large corporations that they might procure from buying residential houses, and or just add on some kind of a surtax for a certain number of homes or beyond a certain number of homes, so it's not as attractive. I mean, taxes is the way to fix things. That's the way they always fix things, and then it discourages or encourages certain activities, and so that might be the way to do it. But to just say they can't, I don't know how you can say they can't. I mean, I guess you can.
Never say never with Trump.
Yeah,
but the thing is, they make a return on these homes. So if you de-incentivize the return and they can't make money, and they can't make profit on this is the story with private equity. They'll just dump it. They'll dump it like a stock. If they're losing money on housing, they'll dump it real quick, right? So that's the other thing. If you just build more homes, the prices will come down, rents will come down,
right?
And then the large institutional investors will move on to their next victim, whichever it'll be, shopping malls or hospitals or something, right?
Well, see what Patrick's been able to pick up talking to Sean McCoy and myself. But no, I mean, you're true. That's the thing. And I wonder just now with just sort of saber rattling that's happening with executive order, which doesn't really do much. I mean, tells Fannie and Freddie to do some things that will only hurt mom and pop investors,
right?
Because they're the ones that are more likely to use a mortgage or anything else. And I don't know how you distinguish between we're going to chop this up into a CDO, this mortgage, but not this one. But some of these, bigger companies may start offloading properties if they feel there's uncertainty, and ultimately they're looking for a return over a longer time window. And if we see an increase of them offloading properties, it wouldn't surprise me.
And I heard him say today, he was talking about the impact it would have on regular homeowners, and he's concerned about that.